Just referred to this. New York Fed President John Williams actually went on TV to sort of nudge things a little bit, right? Saying the Fed isn't really talking about any rate cuts, let alone 3. My next guest says that the Fed's press conference this week will likely be remembered as one of the most important macro events of this decade, and says that any policymaker seriously committed to fighting inflation would never publicly announce an intention to start cutting interest rates before achieving the ambitious price stability target. I want to bring in Crescat Capital Portfolio Manager Tavi Costa. Tavi, I can feel the heat coming from your keyboard as you were typing this out, my man. You seem like you were seething about this. I mean, what are the main issues that you have with this week's Fed statement and Powell's presser?
Happy Friday, Charles. Look, I think it's complacency is the first word that comes to my mind. Core CPI is still at 4%. The government's still spending close to 20% of GDP on fiscal spending. We have 2 wars breaking out still. It's still a chronic underinvestments among most natural resource industries and widespread labor strikes. And so, to me, inflation is still a structural problem. Coming from Brazil, an emerging market, we understand that inflation is usually a psychological impact in the consumers and also in businesses. And so I highly doubt this is going to be a cyclical problem, and I think it's going to develop through waves. And so I believe strongly this is very complacent fad, and I think it's going to be ending quite badly.
In the meantime, you've been an advocate of hard assets. You said it's imperative, particularly, to navigate this next market cycle, and that seems like, for me, it's been a hard sell for a lot of people, right? Because this market is always looking for instant returns. What's the next hot niche in the market? Let's move to that. And when I think of hard assets, from time to time, it feels like selling life insurance to someone who's immortal. How do you get investors to say, listen, this is smart. You better have this because when what hits the fan, you're going to regret it?
It's all about capital flows. There's 2 really massive pools of capital in the world that I think run financial markets in general. One is investment strategies that are very conventional, the 60-40 portfolios. They own 0 gold allocation and 0 in hard assets overall. I think that there's a very strong potential for that to change as we see the valuation of the 60-40 portfolios being so extreme, historically speaking. The second one is central banks. Central banks have started to buy gold in record amounts, but when we look throughout history, central banks used to own close to 80% of their balance sheets in gold. Right now, they own close to less than 20%, and so the other 80% is in sovereign debt. And so I think we're in the process of seeing central banks enhancing the quality of their international reserves, and I think gold's going to play a big role into that. And I've never seen a gold secular market that didn't drive commodity prices and other hard assets much higher. So, I think just from a perspective of how compelling it is from a valuation relative to financial assets, things look really attractive to me on the gold side.
I've got a minute to go, but I want to pick up on this because these central banks that have been the buyers of gold, they're not the ones that are always talked about. I mean, I don't think it's the Federal Reserve or the ECB. And it feels like there's a lot of other countries that are involved that are talked about, like the BRICS nations and countries that may have ambitions of their own to not necessarily supersede the dollar's supremacy, but to mitigate it somewhat and make it a more level global playing field.
Yeah, that's right. I think the Eastern societies have been one of the largest buyers of gold recently. But no, what we're seeing today, I mean, when you think about this value destruction that we had in the last 20 months or so in fixed income, the first institution that really suffers from that really is central banks. I mean, they're the ones holding the bag. And so, you have to have a quality asset in order to sustain the stability of your monetary system. And so as you see the value destruction of those things, it certainly questions the stability of those monetary systems. And so, as we see a world where it's more geopolitical issues and other things, a neutral asset like gold is going to continue to be more and more in demand. So, and by the way, what is really interesting is that gold is about to break out. And if you see other assets that are linked to gold, like silver and mining stocks in general, they're still at very depressed valuations. And so that's really the opportunity in my view. Yeah.
Hey, Tavi, you are one of the best. I appreciate you taking the time. Have a great weekend.
Thank you very much. You too.
All right, folks, coming up, has YOLO spending finally hit a speed bump? We're going to